प्रेजेंटेड बाय ईबिक्स कैश, हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on the Business Today show. I'm Aabha Bakaya, and with me, our global business editor, Udayan Mukherjee. Let's first take you through the headlines. Hit by technical glitches, the government may mull extension of the last date for filing income tax returns by 30 to 45 days. Final decision later this month. Markets continue their dream run. Stock indices at record highs. Reliance and IT stocks lead the charge. Supreme Court wraps center on delays in filling up tribunal vacancies. Orders setting up a CGST tribunal within a week. Maruti Suzuki cars to cost 1.9% more on average from today, the third hike since January this year by India's top automaker. Mercedes-Benz says chip shortage will hurt production for 2 years to be an EV-only company by 2030. Business Today has learned that the last date for filing income tax returns is likely to be extended beyond 30th September. Business Today TV has learned that it may in fact be extended by 30 to 45 days. A final decision on this is likely after the 15th of this month. We'll bring you those exclusive details as well as a chat with Ved Jain of ICAI formerly a little later on the show. First, a look at the markets. Another record closing for the Nifty, Sensex and Mid-Cap Index. The benchmark indices ended with modest gains after hitting lifetime highs in early trade on Monday. Markets gained on positive cues from global equities on rising expectation that the US Fed Reserve may have to keep monetary policy loose for longer. Speculation over a stimulus in Japan and China also led to positive sentiments in equities. The Nifty scaled an all-time high of 17,429.5, while the Sensex hit a record high of 58,515, closing at 58,296. The Reliance stock hit a fresh record high with the stock trading higher for the fourth straight session. Reliance has rallied 9% in September so far after gaining over 10% in the previous month of August. The real estate index remained the top performing index with Nifty Realty gaining 2.2% for the day. Nifty IT also hitting a fresh life high with Wipro leading the pack this time, up 4.9%. HCL Tech was up over 2%, Infi up close to 2%. Broader markets also outperformed with the Nifty Mid-Cap 100 ending the session up 0.4%, while the Nifty Small Cap 100 was up 1.1%. India VIX, the volatility index, was up nearly 4%. Fear gauge closed at 15.11 levels. Let's take a look at some of the top gainers as well as the losers. On the upside, Wipro, HCL Tech, Infosys, Hindalco, Reliance Industries. As you can see, it was Tech all the way, followed by an RIL. And on the downside, we had IOC, ONGC from the oil and gas space, IndusInd Bank, Britannia, and Kotak Mahindra Bank, bringing up the losers list today. Then this seems to be a week-on-week event where we see markets trading at records. The bigger question is, given the way we saw Reliance move today, for instance, where really is the leadership now going to come from?
Yeah, that's a good point, Aabha, because, markets, when they're at fairly significantly elevated levels and have gone through a very good rally, you always want to see signs of leadership. And over the last week or so, you've been seeing some of the fringe sectors, if you will, like real estate, telecom, which does not have too many stocks, actually doing the heavy lifting, with banks not really leading from the front. So when a stock like Reliance goes up 14% in the last 1 month, you know that there is something which is pulling the market along, and that kind of leadership always helps sentiment at critical junctures in the market where a lot of people are watching over their shoulders for the prospect of a real correction. But I think a couple of important things also happened last week, which is that FIIs have started buying again. And that really was a sore point throughout the month of August. And remember, in the month of August, we did see a fairly significant correction in pockets of mid caps and small caps. FIIs were consistent sellers, but over the last 4 or 5 sessions, they have bought, albeit it's not buckets of buying yet, but $600-700 million of buying after a month of relentless selling is something which certainly is helping market sentiment. The other thing is that the mid-cap index was up 5% last week, and that also is a sign that the flagging breadth of the market is beginning to stabilize a little bit. We can all talk about corrections, but the market seems to be chugging along nicely, led by the large cap reliance, with the breadth also picking up a little bit. There doesn't seem to be an immediate reason for correction, because over the next 5 weeks we won't have any earnings coming out. The season only begins in the second week of October. Jackson Hole is behind us, so there doesn't seem to be any adverse news coming in from the central bank in the US either. And everybody is sort of skeptical and waiting for that correction, which is not coming through. So just at this point, of course, a new factor could manifest itself at any point. Just for the next few weeks, I cannot put my finger on this one factor which will lead to a savage correction in the market. So I guess for most traders, prudence lies in tagging along and just following the tape.
Taking forward that conversation on markets, joining Udayan and I today on the show is Samir Arora of Helios Capital to give us a sense of really what he's making of market momentum, where he's concentrating as well in terms of opportunities and growth going forward.
For those of you who are not keen followers of the stock market, Samir Arora has a more than 3-decade excellent track record in the Indian stock market and actually in the global stock market as well. He has performed better than average through many market cycles and ran the highly successful Reliance Mutual Fund for many years in India before starting his own company, which is Helios Capital, which runs hedge funds based in Singapore, and now also a PMS for Indian investors who would want to benefit from Samir's experience. Samir, it's great to have you on the show and good to see you after a long time. The first question that I'm itching to ask you is, did you buy Zomato?
Before that, let me say thank you very much for your kind introduction and welcome back to India or to Indian business channels. Zomato, we only invested in the IPO, which anyway got oversubscribed some, I think 100 times or something, and we invested some $50 million and we didn't get anything useful because it was heavily subscribed. I think it was oversubscribed 55 times, if I remember. So we sold it on day one, and that is where our current interest is over by now.
So you're not a believer in the valuations of that one. My broader question, of course, is to do with what is going on with valuations out here, particularly with some of these IPOs. Does it make you cautious about where the markets have reached?
So first, let's talk about the markets. I don't think the markets have gone up a lot if you look at it over a slightly longer period. So if you say that what should be the reasonable return expectations from the Indian market, well, the last some 20 odd year returns are 15-16% per annum, which would tie in with GDP growth in nominal terms and a slightly higher corporate profit share, because the corporate GDP part might be a little better than say the agri part and all that. So I just put up found these numbers for you today. So if we look at past 3 years Nifty index, starting from today, going back 3 years, it is 15.5% per annum. If you look at 5 years, it is 16% per annum. If you look at 10 years, it is 14.8% per annum. That is from 2011 to 21, or 16 to 21, or 18 to 21. So all of them broadly, nearly exactly in line with what you would normally expect. Now, if you were to do this in 2007, although of course we are not saying it's like end of 2007, but if you looked at it from December 31st, 2007, the previous 3 years, that means 5, 6, 7, would have worked 45.7% per annum, and 5 years was 44% per annum. So big picture, we don't think valuations, valuations a little bit might be high for some things, but the market is sort of magnifying the performance because of its last 1 year performance. Now, coming to the IPOs, that is actually one area where you may theoretically say there is a risk, because this IPO market looks like the peak of 2007, maybe even the 99, 2000 peak, in terms of number of times of oversubscription and the number of IPOs and the size of those IPOs. But I would think that is one of the few signs of danger, but is that enough? Right now, we are not believing it is enough. Maybe some will deflate. The financial investors are making money, that is the private equity investors, and the public market will lose. But overall interest of the financial markets in the market will not come down because at least one set would have done better. And maybe some of them are overpriced, but these are new things in new areas that who's to say beyond a point.
But I take your point that the longer term averages are pretty much par for the course. But rarely do you see markets go up significantly in a one-way trajectory without, even bull markets, without taking in a 10-12% kind of correction. That's par for the course even in strong markets. Do you think one of those could be lurking around the corner, which would come as a bit of a shake-up because people have almost forgotten that there could also be corrections?
Actually, that we ourselves don't mind because we run a hedge fund or a long short fund. But just to say, before this pandemic, if you were to look at the numbers from 2007 December, the market would have been flat even in rupee terms, more or less, I think. And in dollar terms, maybe down 4-5% per annum for 10-12 years. So it was in some sense very bad because the corporate profits were bad and all these things. But there was some logic we were all believers in, which said that corporates have been benefiting at the expense of the overall economy, and their relative position is going up because whether you looked at GST or you looked at DMON or you looked at RERA or you looked at corporate tax cuts, or later on if you looked at COVID, all of these hurt the some of the weaker parts of the corporate sector or the unorganized because they made it easier for the well organized, the guys who were already meeting all these things or who had funding and who didn't need black money and all that. And therefore, that intra India shift was happening. And now, after COVID, maybe there is a new cycle. But the fact that whether there should be a 10% correction or not, or whether there can be a 10% correction or not, you would not even know. Nobody would know. India has had so many 8 to 10% corrections in a month that many times when I write my newsletter, which I write in the middle of the next month for last month, many times I have forgotten why the market had fallen 10% last month. Because when I start searching that what exactly happened, there is no real obvious answer. So 10% type correction may be a shocker or not, but should be expected by everybody at any point of time. That's the way of overall equity markets, and Indian markets generally are much more volatile than say US markets. So you should expect that even more. But you can't keep waiting for it also is what we would say today. It's part of the course.
Okay. Samir, interesting, because you've kind of talked a lot about how, while there is merit in compounding, it's important to be mindful and also keep taking a little off the table when we're seeing markets at these levels. Do you feel that the broader markets are slightly saturated right now and, your conviction lies in a few core segments? Is that how you're viewing things for a retail investor? How should they approach the market?
So we say that there are three real long-term themes in India. One is financials, and actually financials haven't participated fully in the rally.
Yeah.
So if you see these private sector banks and you see their earnings growth in the last 5-7 years, like say HDFC Bank, Kotak Bank, and all, their stock market prices would have gone up more or less in line with these earnings. They have not been, valued higher and higher for the same earnings. And even for the other insurance companies and a few NBFCs, broadly they have done in line with their earnings growth. If you look at this tech sector, the software services which we like along with pharma and specialty chemicals, at least the tech part has been re-rated, but is genuinely doing well. And it seems that as intensity of technology investing share in an overall revenue of a company, because as everybody can imagine, people will have, that is companies will have to spend much more on technology going forward than they may have spent in the last 10 years. And this shift to cloud and everybody moving there, all that has shown that Indian companies are in the right place at the right time. So although those valuations are a little higher, right now we believe that we are participating in a massive, shift in terms of companies wanting to adapt to the new world. So the real, according to us, higher valuations and maybe unreasonable valuations have happened in the consumer sector, which otherwise is our third leg of our portfolio. where the same earnings growth of 10-12% type, which are more or less in line with GDP of India in nominal terms, their valuations, which used to be 30-40 times, are now 70-80 times in terms of PE. And so many of those we have left along the way of the last 2 years. We have sold many of them. Overall, at least financials don't look having massively re-rated, and tech has been re-rated, but A is much cheaper than the staple companies, consumer staple or consumer companies with much higher growth and equally long tenure of growth in the past, and maybe at least there for the next 5-7 years or 3-5 years, which is long market participant.
Always great talking to you, Samir. Thank you very much for your time today, and good to see you again.
Best of luck, both of you. Thank you.
It's the big revelation on Business Today television. If you've been battling the income tax website to file your tax returns, there may be some relief for you. Business Today TV has learned that the last date for filing income tax returns is likely to be extended beyond the 30th of September, perhaps by 30 to 45 days. A final decision on this is likely after the 15th of this month. The deadline set by Finance Minister Nirmala Sitharaman to Infosys to fix the glitches that taxpayers have been facing on the website ever since it went live on the 7th of June. Business Today TV has exclusive information that at least 3 IT return forms are yet to be uploaded on the tax filing website. These are Form 5 for partnership firms, Form 6 for limited companies, and Form 7 for societies and trusts. There have been other glitches as well. Tax deducted at source displayed on the website does not match the figure in Form 26AS. Details from Form 16 are not reflected. Interest calculations are incorrect, as well as inability to e-verify returns, among others. Ved Jain, former President ICAI, joining us now on this. Mr. Jain, take us through the implications, why the setback. There have been so many high-level meetings trying to resolve these glitches, these issues, but it seems that it's still a while before we can get those niggles ironed out.
See, the challenge is coming into the operation of the new portal. The CBDT made an announcement that this portal will be put into operation on 7th June. And then the last date was at that point of time was 30th September. And now for almost 2 months, we are on 6th September, after 7th June, it's more than 3 months almost. And we are still in the dark when this portal will get into operation. So there is no idea as on date, though the finance minister in the meeting held in the last week of August with the Infosys people, they have assured that this portal will be put into operation by 15th September. Assuming that this portal gets into operation on 15th September, as you rightly pointed out, the taxpayer need to know how much tax has been deducted at source. And that information is available when Form 26AS will be available. Form 26AS will be available when all these TDS returns get processed and get reflected on the portal. So it will take sufficient time for that purpose. After you get the information, what tax has been deducted, then you need to compile your return, compute your income, pay taxes. So time period is required. So I believe at least 30 to 45 days time will be required for the taxpayer to collate all this data and then to file the returns.
So lots of challenges that continue to plague the portal, and that will be looked to be resolved on priority by the regulators. Mr. Jain, thanks so much for joining us. Mercedes has warned that the ongoing shortage of semiconductors, which has crippled the auto industry, may not be resolved for another 2 years. It has, however, added that the situation could start easing a little from the last quarter of the year. The company has joined the likes of Toyota, Ford, GM, Volkswagen and Honda in shutting down production in some of its plants. According to some estimates, the shortage is likely to hit production to the tune of $110 billion this year. The shortage has, however, not failed to dampen enthusiasm for electric vehicles out of the Mercedes stable. The company has announced its ambition to turn all electric by the turn of this decade. So what's this semiconductor shortage all about? Why are auto manufacturers so on edge at the moment? And how did this shortage come about? Business Today Television's technology editor Ayush Alavadi explains the situation to us.
What's the link between the latest hatchback and you not being able to get a next-gen gaming console in India? The global chip shortage. Chips or semiconductors are used in practically each device around us. Televisions, washing machines, smartwatches, and even in your credit card. The COVID-19 pandemic accelerated the pace of digitalization and led to increased demand for computers, gaming devices, and fitness equipment to supplement our work-from-home lifestyle. But that's exactly what exacerbated the problem. Simply put, there aren't enough chips for new orders, and that's why many popular products are unavailable. Global demand for semiconductors is expected to grow by 12.5% this year. It takes months to make a chip, and 1 trillion chips are made every year. The rise of 5G and AI, even before the pandemic, had already led to increased demand. But the US ban on Huawei, manufacturing and logistical issues have now made the chip shortage a full-blown crisis.
Basically, it's a demand and supply problem. Any sort of disruption to the global supply chain, say a logistical or manufacturing issue in Taiwan or South Korea, or political tensions between the US and China, can have a massive ripple effect. And also, working from home for the past 18 months clearly isn't helping the problem. This is Ayush Alavadi for Business Today.
Maruti has increased the prices of its cars the third time since January. The price increase is around 2% on average. The company attributes the price increase to raw materials like steel and copper getting more expensive. Maruti has increased prices by around 5.5% this year. The latest hike comes just ahead of festive season when discounts normally rule the roost. Aluminium prices touching a 10-year high thanks to a military coup in Guinea. The tiny country on the West African coast is one of the largest producers of bauxite, which is used to produce aluminium. Prices are already up 40% this year and are expected to go higher with supplies to Chinese foundries seriously hampered by the military coup. Rating agency Fitch has called Bharat Petroleum disinvestment an event risk ahead. The latest report from Fitch says the valuation and complexity of the divestment process could lead to delays. The government is looking at selling its entire 53% stake in BPCL in what could be the largest privatization till date. Now let's take a look at some cryptocurrency prices today. Bitcoin traded at $51,421, down more than 0.5% over yesterday's close. The fall in Ethereum was steeper, with the digital currency down nearly 2%. The Tron and Polygon were down as well, with only the Ripple showing a gain of around 3%. That's all we have time for on the show today. Thanks so much for watching. Good night.